Welcome back to the channel, guys. I wanted to say really quick before the educational part of the video that there is a giveaway going on Twitter. So it'll be the top link in the description, so you can click onto it, open another browser, continue watching the video, and go ahead and enter as well. This video is a re-upload, but not very many people saw it. I had to take it down, but it's very, very good. It's very educational, so I wanted to make sure that it was posted and not go to waste. Ignore the title of the Google Doc. It says, "Is CRT overrated?" It very much so is overrated. It's just another shiny object. The real ones know the real ones know who have been using Turtle Soup for a while. Time-based accumulation ranges and time-based liquidity is almost top on the list of things we look at and look for. So there's, no real need to, understand it and, have to dig for that information because it's already in front of you. Let's go ahead and hop into the video and get to it. One quick note before we hop into the YAP session here. We were live tape reading for free in the Discord today, and we're going to be covering, the FOMC trade that we took. Me personally, I don't trade FOMC because I just don't personally hop on the chart every single FOMC like I would for a CPI day or an NFP day or even, like an unemployment claims day. So live tape rating, we did have some members go ahead and take the trade, and we'll show those executions after we go over the notes. So just be sure to stay tuned for that and the full explanation on the chart via my chart. How is everybody doing? Gonna cover a quick one today, being, is CRT overrated? No real intro to this. Everybody knows what candle range theory is by now, right? It's just a very utilized trading strategy that leveraged the concept of price ranges to understand market behavior, understanding time-based market ranges as well. It is essential to evaluate the efficiency compared to other trading strategies that have come before CRT, that have formed from CRT itself. Right, whatever you see online, saying about CRT, doesn't matter who says what came first or what came from what. Right, you can combine all of them, right, not listen to the noise, and, have a super overpowered trading strategy. Obviously, before CRT, there's obvious turtle soups. Understanding selling above old highs and selling above old highs and buying below old lows. Right, combining market maker buy and sell models, power of three, institutional order flow, order pairing, and order probing. Right, these have been fundamental in targeting and confirming moves in the weekly and daily profiles for a long time now. We know what our market maker models are. If you watched last video, it involves anticipating, accumulation moves, identifying a reversal with the smart money reversal, and confirming those entries based on the specific market conditions. Right, it understands heavily on understanding market structure, your liquidity levels, right, and a lot of other things such as when and why it forms. Power of three is the same thing that breaks down, or excuse me, it's not the same thing, but is I mean, you guys should know what power of three is. It's our accumulation, manipulation, distribution, our open, high, low, close, right? And we have this in every candle, and it aligns, very, very closely with understanding market phases, and exploiting liquidity. It reinforces the timeless nature of, I don't know why I wrote it like that, but it reinforces, every single time concept that we have, because power of three is in every candle, and we understand it from high time frame down to low time frame. We know, our liquidity zones with our key highs and lows, understanding whether we need to displace above an old high or, if we close back within the range. And it has been key for decades, and then that comes into candle range theory, where we know what it is, but it's come after all of these. We've had all of these principles and these key price or signatures in price forever now, and we've been able to use them and just not listen to the noise online about candle range theory, but really just see how we can combine it with our trading strategy we already have. Comparing these CRT with other strategies can really highlight its strengths and its limitations, because there's not always going to be a CRT trade when you could have a trade, but that doesn't mean you have to take a trade, but even, comparing when they all form together can help you find, right, a perfect strategy. Coming into just a simple practical application, using higher time frame key times such as 6 and 10 p.m. 4-hour candles into a London 2 a.m. Manipulation candle on indices reveals how often Asia forms a range that London exploits by taking one into the range, right? In New York, the New York session subsequently goes ahead and continues from that London low and does not take the London session. That's not obviously how it is every single day, but just a practical application you can use, right? It often breaks the low created by London high, right? If breaks the high that breaks the low, and it even this observation can underscore the relevance of understanding time-based liquidity and a core concept in both turtle soup and CRT, right? Your 6 and 10 establish an initial range, you form a manipulation point, and or expand your initial range, right? And you don't usually manipulate and close right within Asia, but you form right your potential high that can get manipulated, or low, excuse me, right? The 2 a.m. candle confirms Asia range, right, into London, into its close, confirming that we've manipulated the range, right, with the 6 a.m. distribution candle following through. Candle range theory is effective, but it's not the sole method for identifying trading opportunities. Historical strategies, like our obvious turtle soup, right, modern frameworks like market makers and powers of three, they all offer valuable insight into market behavior and understanding liquidity, market phases, and time-based patterns. And these all remain crucial for successful trading. Instead of viewing CRT as overrated, it should be seen as a tool, right? Just as, powerful as market maker models, power of three, right? Understanding your institutional order flow into, right, just obvious highs and lows. I'm going to go into a trade now and, go over, right, how you can add all of these and, simplistically see them, into, right, the time and as well as, a news candle. I didn't take the trade. However, right, we took it live, we type read live, and right, we did have a couple people take it, and we'll show that execution now. This is my buddy MQX, right, and we have our FOMC candle here into, around 213 before the post release or whatever you want to call it. Understanding, we'll see, we'll hop on the chart and obviously show. I just wanted to show where he entered, right? And that he did hold to the high. Let me go ahead and mute that. Very sorry about that. And we'll go ahead and finish it where he holds to the high. We don't get a hard expansion from the high like we'd see, and he trades a little bit differently than I do. Right, hits his deviation above the high perfectly, and he goes ahead and takes profit. We'll get back into the chart on my end and go over what we were seeing. We see coming on the 4-hour, we've gone over, right, this array of price action lower past these lows a good couple times, right, into our weekly rejection block here, being right via the wick body, right, coming underneath it, as well as our monthly candle. Coming into the 4-hour though, right, we see we failed to displace past our key low, right, and we didn't fully close back within the range, right, but on the daily candle, right, we did. Also, the 4-hour, right, we see after, right, we had our 1, 2, close back within the range candle into our 3, right, we displaced and didn't, we did fail to displace past our high here, right, but we do see a wickless candle reacting, right, put it in here, right, reacting right underneath our daily rejection block with this candle here, or with that line there. So we do see a quick displacement, right, from our wick and lower time frame, right, reacting, to our breakers and seeing, right, a flip in institutional order flow, right, from this high, right, with this SMT fill into the fair value gap. We saw displacement away, right, coming back to the OB into a 10 a.m. displacement Tuesday, warranting, right, that we should go ahead and keep expanding if this is a key low. Now we have, right, closed back within the range, created a high resistance low with an SMT lower, right, past these lows. Right, we'll show that real quick, right, with these lows, right, and inducement and liquidity with equal lows here. Let me double check which one I'm on, right, yeah, this one. So, right, after we see that, we come in lower time frame to the 2 hour here. We see our displacement in CSID and reaction from our wick candle. We also see a close back within the wick here, right? So no real displacement past lows except for here, past these lows, right? But no displacement past our key low. With our high resistance low, we displace into the fair value gap, and we do see an inversion, and I don't really care about that. But how we've seen Crunk say in the Discord, right? It does, right, give a key to order flow, right? We do need to understand the higher time frame concepts, like I've been talking about, everything before talking about the fair value gap. But seeing this, inversed doesn't mean I'll just enter, as it's inversed, but I do see that we have our previous day high liquidity into, right, our low resistance liquidity. And, as we always say, you take the path of least resistance, and with the path of high resistance below, right, we can start to form how we could reverse, right, form our reversal point here into an expansion Wednesday. Coming into the 2 hour, we'll put a little bit of the makeup back on the chart, right, and see we have a 2 hour CRT low, right, with this candle, right, and then this one closing back within the range and sweeping the previous candle low, filling the SMT breaker, and, right, reacting, like we said, to the breaker, and filling the SMT, or excuse me, filling the FEG, wow, filling the FEG with an SMT, and reacting and displacing away. We come to the 1 hour, and we see, right, a 1, 2, 3 anticipated candle model, also reacting from the breaker into a 1 p.m. Judas swing. We're going to take a little bit of the makeup off the chart, and we'll actually come into the 90-minute as well and see, right, our lower time frame inside of a higher time frame, right, with our CRT accumulation candle into, right, your lunch accumulation into, right, your 130 Judas swing. We don't get these a lot, right, but it was super clean in this case. However, right, in my opinion, I get a lot cleaner trades, so I just didn't, end up taking this one. But once we did get full confirmation, those people who did, do like taking those more confirmation trades ended up taking that and riding it to the high like we see here. We see also that I forgot to talk about. Let me, what am I doing? Right, we see, right, a long wick, and like we said, we've swapped order flow, right, and equal highs, at least into this 4 hour FEG for the low-hanging fruit. Come back down to the hourly, take this off the chart and take the FEG because we know it's there, this as well, and this as well, and come in right to the 15-minute chart where we see our higher time frame breaker formed, our lower time frame breaker reacted to here, leaving, right, our fair value gap broken away from, displacing into the fair value gap, right, leaving this as our draw on liquidity. We saw a beautiful, where was the 830? Right, we'll show it on the 5-minute. One, right, we create this breaker into 930 into a manipulation, small market maker model buy there, right, and then 830 giving a small manipulation lower, right, where was it, right here, right, into our breaker, super clean with unemployment claims, right, open, or accumulating, manipulating, distributing, right, accumulating, coming into, or excuse me, right, coming into open, accumulating, manipulating, and then distributing higher from our order block breaker, right, and then we'll take that off, and then come zoomed in a little bit more, right, just like we said, probing order flow and seeing, right, where we're delivering from and pairing orders down below as well on the higher time frame. Let me make sure this line doesn't say, okay, yeah. As we saw, right, the SMT fill right below this low into the higher time frame breaker and come in, right? See our 15-minute structure with our turtle soup low into our high time frame breaker. So this low doesn't need to be ran, right, coming into the PM session. Right, same thing here, right? Accumulation, manipulation, distribution, accumulation, manipulation, distribution, right? With right one small accumulation, manipulation, distribution, right? To stop out long or stop out shorts, and then we move lower into right our 130 open, or well, excuse me, our one open, right? Accumulation, manipulation, right, distribution, and we didn't get our 2 close, but we can anticipate, right, order flow going ahead to close into 3, right, above the high, which we do close above the high, but barely. But anyway, right, we see as we do come into it, we fill the FEG right down here, and we'll go ahead and put that back on the chart so you guys can see that here. Right, with this line here, we fill the FEG, close back within the range on the 5-minute, right inside of our 140, so the 15-minute closes here inside of right our 130 close as well. Bam. So right, we would have technically missed our rejection block entry, but it doesn't look the best, so no big deal. Right, we do get our 1-minute breaker formed, but we're not pattern trading. I mean, technically we do have a narrative, but I didn't want to trade that 1-minute breaker into right our FOMC candle that easily could have liquidated, right, and induce more liquidity into the low and then ran higher. Coming in right to a after right we created the breaker here, our 2 right created another higher high here, right? You see more confirmation into the induced liquidity and right more confirmation into your market maker model. Coming on the 1-minute, right, we see our accumulation, manipulation, distribution with our halfway point accumulation, our AMD, right, power of 3. Our halfway point with time, not price, into right a ranged discount, into OTE. Noticing right after our 145 candle closes here. Let's go over here. Right into the 145 close, we see a very quick right move down at 146, right into into our rejection block. Right, you technically could have entered here anywhere into the wick, right, and either put your stop below this low and high right here. Right, one, if you see the quick close of the breaker, right, you can anticipate right, this low not being ran here, right, and that's also OTE of the smaller range here. Not quite, right, so I'd probably zoom it out probably just a little bit, right, into the 1-minute CSID, right, after the breakers confirmed, right, you then can pull it a little bit closer with either this low, right, or a little bit higher, right, into that body close, right, because once you close that breaker here, one, you probably won't end up breaking this low. You can, right, but right at that point you can either will be break even, or can either get a better entry right into the lower wick of the quadrant, or excuse me, into the lower quadrant of the wick, not the lower quadrant, right, but right into EQ, and or right just have a normal stop and get a 3-to-1, right, but I try to like to get the higher RRs, and it doesn't drop my win rate ever. It doesn't, I mean, it maybe ever so slightly, but it's not like the biggest thing in the world, right, doing that. Also, you see here, right, as we've talked about, we liquidate that candle low and close back within the range. You can treat this as your order block here, right, and then we close above, right, so you can also long that with your stop below there. into the FOMC candle, but like I said, I didn't want a long into that, being that we could liquidate the low, either here or like we said here. And then coming into the more confirmed entry, we saw MQX right enter. He entered right a little bit after FOMC. I can't. No, he wouldn't have entered there. I think he entered here somewhere. Right in. I'll double check that. But right after you create the breaker on this high, same thing here. Right, reacting from it, high resistance high. Right, close above the body. Right, react to the body, and then move higher. Another accumulation, right, news manipulation, and then distribution, right, to the news high as well, leaving behind, right, one, your high resistance low, and then two, your anticipated failure swing, right, delivering higher. Another, right, beautiful delivery. It was, I don't know, it's more a hindsight beautiful delivery. Like we said, it's coming into FOMC, and I just wouldn't like to enter there, understanding that we could have, more volatility past the low, into this protected low, edging that, or inducing more liquidity there, and then, running higher. But, we see that, first take profit hit, and then, here you would have got stop break even, right? Maybe, I don't know, maybe if you did, held, you might have took profit here, like, him. He took profit full there, but he wouldn't have got stop break even. And right, you can always just STD the breaker, right? And not this one and or the other one, right? But we see we hit 2.5 here, and then you can always STD this one as well. And that's just how he likes to trade, right? That's just how he trades. Yeah, we didn't quite hit 3 before we, came break even, but if you're entering here, right, you wouldn't have got stop break even, and if you, at this point would have been edging 3 with this many equal highs, you probably would have held to 4. So, just a little standard deviation sauce if you guys use that. But yeah, go ahead and end this one here. Don't want to, take too much of your time, right? We see market just closed, so wanted to get to this one pretty quick, so, you guys could have this one out Thursday, so you can go back, look in your charts, and yeah, look why we expanded one higher time frame in Asia, and then as well why we kept expanding into FOMC, and had no reason, just kept negating each low and had no reason to keep breaking higher, right? One manipulation candle and an expansion day is all you need, right, to then accumulate, manipulate into the breaker you created, right, to then distribute higher. And today was a very good example of, just a classic buy day doing what it does. Like we said, took this live in the Discord. Well, I didn't take it, right, but we tape read. Some people ended up taking it. But yeah, easy draw into this high, right, low time frame market maker buy model, CRT as well, into, a power of 3. Everything you need to have added into a trade, everything you could ever want, right, with, good RR, a good risk, a good win rate in this as well. Just a overall pretty decent trade. The only thing I didn't like was news and FOMC. So, like we said, we'll get plenty of very, very good trades to take. So, once we, just keep looking out and, using our good narrative, it becomes pretty easy to get a very high win rate with a very high RR. And I hope you guys enjoyed, and, I'll see you guys in the next one. Sorry about this one being a little bit longer, but, there was some sauce dropped in it. So, be sure to, have your, pen and paper out, and, we'll see how many people go back and rewatch and, use the little saucy tips that I've dropped in here. Because, right, even like that rejection block close on the 30-minute into the 15-minute close as well, right, into the halfway point of the candle, right, no needing, to the, then sweep that low, right, and then react, right, just barely below the wick. Super, super good stuff, and I hope you guys enjoyed it. Yeah, have a great one.